Welcome to TradeTheNBI.com. This is John. This reports for the 25th of January. And as we're ending the week, we've gone pretty much sideways here, right at about 61% Morganacci lines. And shakeout, which was strong, is sort of faded weak. Now, this would be very problematic because if you look at the numbers, you have a yellow shakeout at 12 with the magenta at 29, which means you've already crossed over there. Yes, you have the white histogram equal to the magenta at this particular point. This is part of that little wave action that we've seen throughout this entire move, where we've gone up, 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 and this has gone up, 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 matching it. The DOC not quite doing the exact same thing. It's making slightly higher peaks and softening up and not yet making lower lows. Now, the interesting thing about this is when you see this kind of action, it can be a little daunting in the sense that you're thinking, oh my gosh, should I get out now or is it going to collapse? Well, whenever you have rising gold going into that, usually you just get a little bit more straight across and that begins the next move of that shakeup. Now that happens a good portion of the time, somewhere closer to the mid-80s, which is, from a probability standpoint, a much better place to be than a lot of the other configurations. So all the imminent doom, blah, 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 it really hasn't borne out. And even if you look at the intraday action, it's very choppy, which is good because it's that mean reversion, which is very normal. And so there really isn't anything to be getting freaked out. It's like amazing the number of articles that you see that the sky is falling and the end is here, as if they're trying to convince someone and so on. I know we just ended up with record unemployment, of course. I find those suspicious. However, the labor participation rate that we really look at has improved dramatically, and that is the real significant number that play with this stupid unemployment thing, which made it useless as a statistic for us, but neither here nor there. And you can see the NASDAQ clearly within that negative shakeout, but you can see that strong rising gold. Now, you can have a rollover effect of the gold that starts out where we start to see some flat to modest lower. But we've got the clear 50% Morganacci line, a break below that. Lets you know that it's time to be out of it. The continued weakness in the euro, not doing a whole lot to help the S&P, but it's still doing okay because at the end of the day, U.S. growth is still there, which has caused a pause in gold at this particular time. Doesn't mean that inflation still isn't a factor, it's just less of one. All right, so here's my updated algo with all these stupid numbers on it. All these numbers represent our pivot relationships between the yellow checkout and the magenta, but it just counts the number of bars back at which the pivot, and so as part of the testing that I'm doing, you can kind of ignore that and use the regular chart in a second. But I just wanted to point out that zigzag. This is just that choppy action that we started to develop, and it literally stays between the zone. And so if you're not careful with what you're doing, you get bounced all around if you're trying to just trade, a point or two here and there. Literally, if you know you're buying at the zero, you're looking for a move back to the top in this particular case, and obviously the sell signals are coming in relatively high to those. And so, in my view, it's one of those where you have to just let it go until I get a significant signal that counters it, and then you can go with that. In this particular case, I didn't even mark it, but we could have. There's the beautiful DOC spread that comes in right here with the cross. So you get the important factor of steel moving below the cyan. You've got green moving below cyan, which helps. Green's also moving below red, and orange crossing steel, all at the same time. And that's just a beautiful thing when it happens, because it always leads to this. Not always, but pretty good chunk of the time, until you get into a move that you're going down, and this is a critical one. You'll get this set up right here after a long run up and think that, okay, it's just all going to collapse. Well, sometimes you're forgetting that this is part of that ABC, and so this is a double whammy to both longs and shorts, and a good thing to pay attention to. The move up comes up. If you've got your stop that's trailing somewhere around the 50% line, well, you're almost certain to get yourself stopped out. This is where you'll see me talk about it's like one of those where, okay, at that particular point, literally break even. Can you imagine? You're basically exposing yourself. You just had this fantastic run and you're watching it all evaporate. So you're either got to hit the high with your sellout and then look for your retrace, but you've got to be prepared to re-enter at that exit point. Because if you don't, this is where you lose those big runs going up to the upside, because this is a very common setup where you'll get the move, the 50%, and you just don't know that this wasn't going to be the one that 50%, so maybe you're thinking, okay, that was my move. That's not quite significant enough. Usually you're going to have a good 4-bar move. In this particular case, it was 4 bars, and then it exactly hit with the orange dipping below. It's amazing when it does that right in order, and then boom, took off. So there it is. Will it all come back? Of course it will, because it's all positive extremes, which again would be healthy if they're going to do the same thing in a 50% retrace, and so on and so forth. And that's how we measure that. So looking at our normal GAM function with the dots, you can see every time we go towards the peaks, we got our little dot conglomeration down at the bottom, same situation. This is a great one that's going to be followed up more detail in the new paint bar that I'm finalizing. And it's the indication when you get the big drop-offs where you have just a single red DOC pivot that comes down, and there's really no range for it. Oftentimes you'll get it where your only other pivots are above 0 on a long run, and it's the first dip. And the criteria for those can be difficult because you're always below the negative 13 with your shakeout at that particular point. Maybe you've had these big dips below the extreme histogram, and it looks like, well, I can't do anything, until something proves it, and oftentimes you get like a nice rally move back. The easiest way to look for this setup is you're looking for that steel cross. At the same time, you're looking for pivot back up of green over the red. You don't exactly have to have the orange. Usually when you do get the orange moving underneath the red in that, it's usually coming right at this point where you get that initial softness. You get like a little quick pop, and then it comes back, retests near the lows, which satisfies the extreme, and then begins its run up. And typically, depending on where you get in, if you get in early with this, you've got to sit through the fact that you were up pretty decent and comes all the way back to you. And in some cases, it'll even make a slightly new low before making that turnaround. But the key with this is that as long as you have your yellow shakeout riding nicely above your magenta, you're good to stay with that until it starts to do the little breakdown. And this first initial one hits, you form positive extremes. I like that because it's like those become safe spots to attack from a short standpoint, especially when you're near the high. You have your high break as a stop point. You also know that you're looking at a minimum target point. Where I'm not a huge fan of getting into those is way late into them, where you've decided to wait until you get your DOC spread, and then what's happened is you filled the positive extreme. Because once you filled that positive extreme, you may not have as much room as you think, particularly if it's a 50% retrace on that. So always look for that general thing on a nice uprun move so that you don't get yourself tweaked out, or as I like to say, shaken out too soon within those setups. But this will become very effective from a buy standpoint, because you need this to happen within 4 bars. So you got to have that crossover, and literally you need to have your green crossing your red, and your red should be pivoting up, and at that point you should have the magenta being crossed by yellow right down here. In this particular case, 1621 to 1658, it just crossed above. At the same time, you have your orange dip. You're good to go. But look at what happens. You're right at the 23%, and sure enough, dips back down to, well, conveniently our algo that we already had marked there. But that's still an important feature, because I like that, because I'll utilize that as an opportunity to, when I get my signal, I look for a little bit of trailing in price, and I'll trail down until I get to something like that. And literally, it just narrows your range, because then you're talking about the difference between 28 3/4 to 26 for the low. Okay, well then, even if I'm a point and a half below the low, I'm still within 4 points from a stop standpoint, looking to capture the long. And from 28, and I already get to 38, and I'm still clean with the run. Yeah, that's a decent way to make your 10 points, and at least I know that is a dynamic range between the algos, particularly in a choppy day where we're just going back and forth with algo to algo. So just a few little insights, hopefully that helps. I'll put up any additional chart ones that pop up. Oh, we can look at the 50K because that was a really good 50K that started with the short from back over here at the end of the long. We saw this suspect long take place. It wasn't bad, it's just we knew it wasn't going to last. And so those are the adjustments that will be made for that, because that will end up being a slightly profitable trade of maybe 7 or 8 points. And then we went into the buy setup that started here, but within this we could really see that we were just sort of like humdrumming it going across, even though we had rising gold down at the 0 point. We had our white candle buy. This is what they tend to do sometimes, is just trade zone to zone. I mean, this has been between 23 and 50% on the 50K here, which is finally now breaking out of that move. And we've still had continuing rising gold. So if we were looking at this from a gamma function paint bar, these would all be gold candles in that nice ride, just meaning the trend is still strong and has maintained itself. And you're not getting really a whole lot of pivot action or anything from the DOC, so it doesn't really become all that helpful until it'll be more helpful on the breakdown side rather than on this move up. So that is the long, the short of it, and nothing pessimistic as far as that goes. It doesn't mean that we're not going to have range moves, but looks good. As always, though, trade well, and we'll keep you updated on any new developments.